Good morning, good afternoon, good day. Welcome to the Graduates Club meeting 29th July 2020. I'm Sagar Nandi, retired IT professional, currently swing trading stocks using the Q systems and techniques. This is my traders forum, my email ID, YouTube channel, and Twitter handle. I regularly share market and stock live analysis on these channels. They are open to the public and you are most welcome to make use of them. Enamul, Rick, I see you have joined. Are you able to hear me and see my screen? I am trying to broadcast on YouTube in parallel. Great, thank you. Thank you. You are also there in the meeting, Rick and Enamul, so you may use the meeting facility. Your microphone is also on. You can use that if you want. Let me continue. Disclaimer, I am not an investment advisor. This demonstration is for educational purposes only. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of the trades. This is a live session. I have not prepared for it. I'll analyze the market along with other Q trader friends using the technical systems Q Elite and Q Global. Q Elite runs on TradeStation, Q Global runs on Metastock. For fundamental analysis, I use Q Vital. For sector industry rotation analysis, Q Edge. And sometimes for doing market level index analysis, I use Q index. That was the last slide of the presentation. I'll now continue with the live system. Before beginning with the live system analysis, I would like to demonstrate one thing. We have this Q Elite running on TradeStation. Today I released an enhanced version and I will demonstrate the use of the two new desktops, the 4K desktop setting and the full HD desktop setting. So you can see I'm logging in for the first time in TradeStation. Then it will ask me to open the desktops. Give it a second. It may be coming on my other monitor. Okay, here. And you will see there are now two new startup desktops. One is for full HD, one is for 4K. What you may do is open only the desktop that you want as per your monitor resolution first before opening any other desktop that you have, including Q Elite or any of your custom desktops. I am using full HD monitor for this session. Let me demonstrate how it will look if I start up using 4K. It will look little bit distorted. The sizes will not be okay, not fine-tuned for full HD. So I'm opening the Elite Startup 4K desktop and only that one. It is opening on the other monitor. I will drag it to this monitor. Here. Here you can see the sizes of the headwinds are too big. The band indicators are too big. The volume activity bar extreme indicators are too big because I opened the desktop for 4K. Now I'm going to open the desktop, that is the startup desktop for full HD. Again, it's opening on the other monitor. I will drag it to this monitor once it is open. Yes. Now you can see in the Q Elite startup for full HD desktop, once I open that, whether it is headwind or the band indicator for stretch, all the other band indicators, the stretch indicator on the candles, the volume bars, their extreme indicators, everything is sized, fine-tuned to the full HD monitor. So that is what you may do when you are opening Q Elite. Open only the startup desktop that you want. I'm going to close the startup 4K. No need to save anything. So for full HD monitor that I'm using, I opened the Q Elite Startup Full HD. And after that, I am free to open anything that I want. For webinar, I have set up this webinar desktop. Once I open now the webinar desktop, you will see every indicator is sized properly. I no longer need to go to individual workspaces, individual desktops, individual study groups to make any changes. All I need to do is open the startup desktop that is aligned with my monitor resolution. Let the webinar desktop open, then I will start with my regular session. Great. Now I may even close the startup. It may work, but for safety, I'm just going to move it to the other monitor. Okay, now let's look at the market. We look at the global market quickly. Let's start with AXJO, Australian market, and look at it using the weekly daily chart template. I'm using Q Global running on Metastock. For a while now, I have mentioned that AXJO is moving inside a range in the daily chart. The weekly was also moving inside a range, and that was not a safe time to take any directional trade. That view is continuing because we are looking at the market indices. No need to look at the relative performance. I deleted them. Let's look at the China market. I'm using CSI 300 index. On this day, it gave a magenta flow color candle in the daily chart, but you can see the daily never changed color to magenta. Therefore, we didn't have any go with flow, trend following, short trade setup, and there was no other short trade setup. There was no headwind short setup because no headwind signal was there, and no box setup or bounce setup also. Therefore, though we were ready to take a short if the weekly aligned with a short signal, that didn't happen, so we didn't take any short setup. Today price went up just below the memory resistance line. There is no Q trade setup right now. We may wait and watch and see where it goes from here. It is also moving sideways now. If you look at this area in the daily chart, it is moving sideways, same as was true for the Australian market. Let's look at the Hong Kong market, Hang Seng Index. It went up, made a higher high, then pulled back into the previous low. Now, if it can go up and break above the memory resistance, then it may give a long trade setup. That may be a breakout long trade setup, or if the weekly changes color to cyan color, that may also be a go with flow trend following long trade setup. When it is breaking out of the memory resistance, if there is not enough volume or pressure, you may drill down into the underlying stocks and look for breakout candidates that are having pressure or high volume. The indices sometimes may not have enough volume, however, underlying stocks may have when they are both giving breakout setups. So far, none of the market indices are giving any trade setup. What about the Indian market, Nifty 50 index? This was very bullish and it is remaining bullish because there are many memory support lines. It will take some effort to break through all these support lines, and I have not seen that happening in one day. It doesn't break through so many support lines in one go. Usually that doesn't happen. There is a bearish headwind signal today, possible reversal signal, but because there are many support lines, we are not going to look for any short setup. And it is at the upper boundary, so there is no long trade setup as well. It is looking more bullish if we look at a longer term picture. It is looking more bullish than Australian, China, or Hong Kong market. Let's look at the FTSE index that was moving sideways, very much sideways, and that is continuing. No swing trade here also. Now let's look at the USA market, and for that I'm going to use Q Elite on TradeStation. Let's look at DIA. In the earlier session, I mentioned about the weekly memory resistance. And I always mention the memory support resistance, like the other Q indicators, are very important. When it is at resistance, we were not going to buy DIA. Instead, one technique that I often use is if price touches memory resistance and reverses, in this case in the weekly interval, I switch to intraday time frame and look for a shorting opportunity. That would be very profitable. This week is not complete yet. However, if we look at the last 3 weeks candles, all of them are having upper tail. And this week and the previous week, shape is also bearish. This is what I saw in the last webinar also, and I mentioned that the weekly seems to tell us that price is going to come down. However, I also mentioned there were multiple supports in the daily chart that is telling us to be cautious before shorting DIA. Using daily weekly, there is no swing trade setup either in long or short direction. However, you may look for low risk shorting opportunity using fine tuned chart. The relative performance line is showing that it is underperforming the market. That is DIA. The other ETF that was reversing from memory resistance in weekly was IWM, and you could take very profitable short trade in IWM also when it was reversing from weekly memory, and I could take some trades like that. There is no swing trading opportunity. You may continue to look for shorting opportunity using fine tune chart. Nasdaq ETF QQQ, that was the strongest and it is still very bullish. Though the weekly candle color has turned yellow for 3 weeks, and for 3 weeks the highs are becoming lower and lower. Still it is not bearish enough to take any short trade, and in the daily there is a memory support nearby. It is inside a triangle pattern. If you are looking for a shorting opportunity, from the charts you can see that DIA and IWM are weaker and you may look for shorts there, not in QQQ right now. S&P 500 ETF SPY also forming neutral candle for 2 weeks now, neutral color in weekly chart. If it can come down below the weekly memory resistance, that will create a false upside breakout. Until then, SPY is not the first choice of market ETFs for shorting. In the daily, it is moving inside a narrow range. Too high up near the upper boundary to take any long trade. We may watch to see where it goes from here. None of the market ETFs are suggesting that there is a good trading opportunity, either in long or in short direction. What about Q edge? Q edge is becoming more bearish than earlier. If you remember my last market roundup, or you could see that from your own Q edge home statistics, at that time the 5-day statistics was balanced. Whether we looked at the sector advance decline or industry or stock, that time the 5-day picture was balanced. Now it is slightly more bearish, about 60% bearish, whether we are looking at sectors, industries, or stocks. Over 2-day, it is more balanced. However, yesterday it was again more bearish, now about 70% across sectors, industries, and stocks. Yesterday, I was sharing the Q Edge home statistics on Twitter. I shared several snapshots, and you could see from those snapshots that the market was weakening. The red pie portions were becoming bigger and bigger. However, when I drilled down into the sectors yesterday, I saw that there were strength in certain sectors. Which ones? Real estate and utilities. They were very strong. Both of them are defensive sectors. Earlier, I shared several buying ideas in these sectors. Let's look at the forum page. Yesterday, I in fact had a very profitable day. Some of the stocks that I shared were DEA, for example, DEA and HIW, and also WELL. All these three stocks were in defensive sectors. Let's have a look at them using Q charts. DEA, I think I shared this stock on this day. Then it tried to come down, and yesterday it went up strongly. I have a profit in this trade now. The other one was WELL, WELL. I think I selected the stock based on this day's candle. Then it tried to go down. On this day, the traffic light candle color turned red. However, that day ended with a long lower tail candle, and volume was very, very, very low, what some people may call low volume test. And it came near the memory support and reversed from there. And yesterday it went up. It closed above the memory resistance, though there is a small upper tail. I have a profit in this trade as well. And the last one that I shared from the defensive sectors, buying ideas in recent periods. In fact, the buying ideas I shared in recent periods were all in defensive sectors. I think I shared it based on this day's candle. If I remember correctly, you may check out the forum post. Again, it tried to go below the memory support but reversed. That created a false downside breakout, and yesterday it went up strongly. I don't remember exactly, but whenever these stocks, each of these three stocks had liquid enough options, I bought the stocks with synthetic position. That is, I shorted the put and bought the call at the same strike. because few days passed and then the stock went up, I have reasonably more profit than I would have if I simply bought the stocks. Both would be profitable, but the positions where I use synthetic position, I think I have little bit more profit because the short put options lost value. We'll see how it goes from here. They are on in defensive sector, so I'm going to hold them. Several of them also had a decent dividend. That was another reason I had in mind while I bought them. On the other hand, the stocks that I shorted, they were all in non-defensive areas. One was in EFX, and EFX was a stock that was identified by another Q trader, Mike, in the weekend market roundup. That time, Mike shared this idea in EFX and see how the stock looked like at that time. It is a very good idea to review the trades. Doesn't matter whether the trades are making profit or loss. Once you complete the trade, close the trade, you go back and review and see what worked, what didn't work. Gradually, you will start to build a repository of patterns that are working for you. And Mike shared this idea in the last market roundup. I think that was the first day you could think of shorting it. The weekly had a very bearish shaped candle. The daily tried to go above the watermark resistance, reversed from there with a bearish shaped candle. Very next bar, it gave a bear release signal and the traffic light candle color turned red, flow color turned magenta. It went down with bearish pressure, U-turn, both. And you can see it didn't have extreme volume. You don't need extreme volume if there is high bearish pressure. Both are bearish enough in terms of impact. And that gave a very nice shorting opportunity. I don't know if Mike noticed it during market hours. That time it was Friday. Then he could short it during the day at a higher price level. I didn't notice the stock before. I came to know about it from Mike in the market roundup during the weekend. Therefore, on Monday, I shorted it and I used vertical. And let's see what vertical I used. I shorted it on Monday. So you may say around this price level. Let's say 100, just below 170. And see how I constructed the vertical. I bought 170 put that was in the money and I sold 160 put. Why 160? Because the watermark support was at 160. So I decided to sell 160 leg and buy just in the money leg. 170 buy and 160 sell. I used August expiry. It had 24, 25 days left to expiry. I shorted on this day, Monday. My signal day was Friday, this magenta color candle. And this little drop, since I shorted, you can see the vertical gave me very high profit, more than 40% profit. Because it was coming to the yellow direction line and it has dropped significantly from the peak for 4 successive days. And because I had reasonably high profit for 2 days of trading, I decided to close the position. Usually, you may consider booking profit in a vertical when it has 50% profit. That is a thumb rule that many people use. In this case, I could book at 40% plus as well. That was a very profitable trade and it was in a non-defensive area short trade. Let's look at another stock that I shared earlier, and I am continuing to hold partial position while I booked partial position. I shared it earlier, HTLD. And this will show how I am managing the trade. I shorted it based on the memory resistance in weekly daily, and I shared it in the forum at that time. I booked partial profit on this day when more than risk distance was covered, and I had no reason to exit full position. In this case, I exited two-thirds of my position. It was a stock short position. HTLD didn't have liquid options, therefore I could not use options, verticals or put. So I shorted using stock, bought back two-thirds of my position, and I left my remaining position stop just above this memory resistance. Even if that stop is hit, I will end up with some profit. It didn't go up or down since I booked profit. Tried to go up yesterday, fell down. The memory support is still there. If the memory support is broken, I think I'll have a much bigger profit on the remaining position. Next target could be this watermark support level. However, I'm not going to book my profit even at that level. I will simply continue to trail my stop down and down using the Q protection signal. HTLD is in trucking industry, also non-defensive. That is how I am taking trades now, buying defensive stocks, shorting non-defensive stocks, buying stocks that are fundamentally strong, shorting stocks that are fundamentally weak. Yesterday, I shared two pharma stocks. They have not broken out of memory support, not support, sorry. They have not broken out of memory resistance yet, but it may be worth looking at the two stocks. One is ANIP, one is LCI. Let's look at the snapshots I shared yesterday. About the industry, they were in pharmaceuticals industry. You can see here the 5-day, 2-day, 1-day and real-time performance of pharmaceuticals industry from negative to less negative to positive and positive again. This pink color is yesterday's real-time movement. Pharmaceuticals was up yesterday, though the market was down. And while the industry percentage was changing like that, you can see the scorecard. The usefulness of the scorecard is obvious from here. The scorecard is helping us to realize that it is more and more outperforming other industries. Though there are up down moves in the percentage change in the industry, relative to other industries, it is steadily going up. The sector is more up down. As I tend to say, I don't look at sectors when deciding my trades. Sector is too broad. I decide my short-term trades based on industry performance, and that was bullish yesterday for pharma industry. And I found these two stocks, both of them had excellent valuation. One is ANI Pharmaceutical, ANIP is the ticker symbol. You can see here, everything is cyan. Valuation, secondary valuation, earnings quality, short squeeze potential. Earnings growth is negative, that's fine. We don't expect a stock to be of undervaluation plus great earnings growth every time. In terms of valuation, it is looking great. Here is the chart for ANIP. In the weekly, it is about to break above the memory resistance, about to close above this watermark support, about to create a false downside breakout. In the daily, about to break above this memory resistance. Yesterday, not yesterday, 2 days ago, it displayed a bullish headwind, possible reversal signal. I'm watching this stock, great fundamentals. The next stock also in pharma industry, Lanet, LCI, great fundamentals again. Everything is an valuation, secondary valuation, earnings quality, short squeeze. Earnings growth is negative, that is fine. We don't expect a stock to be undervalued and high earnings growth at the same time. LCI also has great fundamentals and it is also about to break out, both from the weekly memory resistance, at which point it will also create a false downside breakout, and about to break out of the daily memory resistance as well. I'm watching both of these stocks. And if you are following the news, you know that US government invested a lot of money in Kodak. Kodak had filed for bankruptcy earlier when it was in photography business, but now US government invested hundreds of millions of dollars into Kodak for them to manufacture active ingredients, etc., for the pharma industry. US is doing that to reduce reliance on other countries. And I noticed at the same time, these two very undervalued stocks in pharma industry were going up. So I took special note of them. I'm tracking these two stocks again in defensive sectors. Let's look at the Finder insight now. I ran Finder. What is Finder? Finder are the two combo explorers that we have in Q Global on Metastock. I ran them both for weekly and daily interval. Let's see the data. For the weekly interval, today is Wednesday, pre-market hours. For the weekly interval, the picture is balanced and it is running the scans on the current week. It is not previous week's data, real-time data, current week's data. Whether we look at all signals, strength signals, continuation or reversal, everything looks balanced between bearish and bullish. However, yesterday was weekday and this is the daily Finder insight. We saw earlier from QH about 70% of sectors, industry stocks were bearish yesterday. The same percentage is showing up here also. 68 to 70, around that percentage of signals were bearish when we ran the Q's combo scan. If we look at the continuation signals, I can see large number of go with flow, possible setups, large number of breakouts. And when we look at reversals, large number of headwinds as well as reversal. We may look for some shorting opportunity using these signals. I like to short. If I have a good setup, short at the top using the headwind or reversal or combo, like I could do in EFX. Let's try to find headwind plus reversal setup, and we may also try to find go with flow plus breakout setup. Let's go to bearish candle, bearish tab, headwind, flag them, reversal, flag them. I can see there are two. Let me close the Metastock charts. Come back to Finder, select them, click the chart icon. No, I was on Explorer. Let me go to chart application, put my cursor on the instruments, go back to Finder, click the chart icon again. That will open the two charts using Q Global template. Huntsman, ticker symbol HUN, very bearish pattern yesterday. Very large bearish candle. You can say dark cloud cover, very nice name. It's a big reversal candle. You can see the reversal dot here. Bearish headwind signal, bearish flow, bearish pressure, very high volume. It's looking very bearish. Let's look at the other stock. I'll come back to Huntsman using weekly daily soon. BLDR. This is reversing right from the memory resistance, giving a bearish headwind signal. Traffic light candle color is red. Yesterday it had very high volume also. If you ran the scans yesterday during market hours, you could short BLDR yesterday somewhere in the middle of the candle. That is a valid trade setup because you would be noticing a reversal from memory resistance in daily interval and then switch to fine tune chart 5 minute or 10 minute to short it. The same technique that I described earlier while discussing DIA and IWM. That would be a very nice entry using Q fine tune chart. Today, if price opens little bit higher and then starts to go down, that would give a low risk entry opportunity using fine tune chart. Whereas if it opens lower and starts to go down, then the risk may be higher because top is far away. In these cases, I sometimes get lucky when price opens higher and then it starts to go down. The memory support is still some distance away. You may keep an eye on that. Let's go back to Huntsman and let's look at it using at a glance weekly daily chart. Very nice. It's more reason to be bearish because weekly is creating a very nice false upside breakout at this memory resistance and coming down. In fact, yesterday it opened with a big gap up and started to move down. Therefore, following Q technique, you probably had a gap short entry opportunity. Provided the early range was not very wide, let's check it out. HUN, and I'm switching to Q Elite on TradeStation. And you can see whether I look at daily, weekly, or fine-tune chart, all my indicators, Q indicators, are displayed with proper size because I opened the Elite Startup desktop first. In the morning session, I'm going to use 5-minute interval. I change that. Initially, it opened at this price, the blue pivot level, that was far higher than previous day's high green pivot. That created a gap up open. Then the early range low, early range high lines formed and price came down. So we could try to short it when it fell below early range low. Putting stop just above early range high. This should be the risk distance. And once it came to previous day's low, you may say the risk distance was covered. You could book partial profit right at this point using GTC order, and for the remaining position you may continue to hold. So you could take a trade in HUN yesterday looking at the weekly daily weakness, and also you could take the short trade using the gap short entry technique. Both are looking weak. Now let's refresh the data and try to find out, go with flow and combine that with short breakout. There are many stocks now, 41. What I'm going to do, I'm going to put my cursor on this symbol header and click the peer analysis icon. It will bring all the 41 stocks to Q Vital. I don't want to open 41 stocks one by one using charts. Last time there were only two, so I could easily open them using charts. Because there are 41 now, I could open them using charts, but it is more efficient to look at their fundamentals first. Because I'm looking for shorting opportunity, let me try the 3-star. No stock was found. and I don't need to reset now. In the latest version of Q Edge Vital Index, I may simply click the single red star. That would give me all the stocks that are either overvalued or have negative earnings growth. And now I have a large number of stocks. I could sort them by daily performance, and let me open all the stocks that went down by 3% or more yesterday. All these are fundamentally weak stocks, and they are giving some kind of Q bearish signal, technical signal. What signal? All of them are giving bearish flow and bearish breakout. Let's go through them. AWI close to the lower boundary, close to the memory support, not interested to short. I'm closing the charts that I don't want to consider. This is looking weak. ENPH, NFACE. This was a very popular stock for buying for many traders, but at the right age, it is giving a very nice breakout setup, though the pressure is not there. Neither is any high volume. Therefore, I might not short it yesterday. You may keep an eye on this using fine-tune chart, but I'll come back to it and look at it using at a glance template. Let's go to the next stock. ST. This has memory support here. Not interested to short it. Close. This is looking weak. Zencore XNCR. I'll come back to it and look at it using weekly daily. AKBA. This is also looking weak. It's a biotech. I think biotech AKBA. Biotechs can suddenly go up or down. So let me close it. Let's try to avoid trading biotechs unless they are at a very low price or somebody knows about the industry. I don't know about biotech specifically. I prefer to buy them only if they are at a very low price level. Omnicom OMC at memory support, not going to short it. FLS has memory support, cannot short it. APOG, it is breaking one memory support. However, if we take a step back, it is really moving sideways. It may go up very next day. So I'm not going to consider shorting it. 2U TWOU has memory support, not going to short it. MYGN very flat, not going to short it. Yelp has memory support, not going to short it. Very flat IVZ Invesco, not going to short it. HDS is looking weak. I'll come back to it. LYB has memory support, not shortable. Aero Electronic ARW also has memory support nearby and is really flat for this area. When it is in a narrow range like this, I tend to not take any trade unless it breaks out in either direction. Therefore, I'm not going to consider either long or short in a stock like ARW. Close it. Back to Huntsman. We already saw this. This is looking very weak. Oh, Huntsman, weekly daily. Let's close Huntsman. Close Han. Close BLDR also. We looked at it earlier. NFACE. ENPH. Let's look at it using weekly daily. This is looking weak. It has a breakout trade setup, though there is not enough force behind it, no bearish pressure or volume. You may also think of it as a go with flow short trade setup because weekly, daily both are magenta. If it goes down from here, you may consider shorting. One thing you may notice when a stock closes very close to the memory support, it has technically broken the memory support but closed near it, and earlier it was in an uptrend with higher high, higher low, then you may not short it on the day of the breakout. Might not short it yesterday, but keep an eye on the stock today. If you shorted it yesterday, you might consider using options verticals. Today will be luckier if it opens little bit higher, maybe above the memory support, and then starts to go down and breaks the memory support. That would give a very nice shorting opportunity using fine-tuned chart. ENPH, we already know its fundamentals are weak. Let's check out its industry. I'm going back to Q Vital, put my cursor anywhere on the stock and click on the cog icon to check its industry. Very nice. Semiconductor equipment. Very nice. The industry was very strong earlier, beautifully weakened yesterday, beautiful for short traders. The second most decelerating industry yesterday. That is relative score. If we look at the industry percentage, it had a big negative percentage move yesterday, almost 3% down at the industry level. So ENPH may be a possible shorting opportunity. You may keep an eye on that using fine-tune chart today. Let's look at the other stock that we found. Close end phase, Zencore. Zencore, and we have another one, HD Supply Holdings. Let's look at them side by side. Which one, if you wanted to short one of them, which one would you like to short? Would you like to comment on that? Looking at them side by side makes it easier to decide. Of course, they may be in different industries, we'll check it out. But if you just decide based on these two technical charts, both of them are breaking out below memory support. Both of them has bearish flow. None of them has bearish pressure. None of them has heavy volume, though they are breaking out. Enamul says HDS, Rick says XNCR, Zencore. Personally, I would like to short HDS. Why? Because it was inside a triangle pattern. Lower high, higher low. And I can instantly recognize the sideways narrowing range from the triangle pattern memory resistance and support lines, whereas Zencore made a higher high. So it is still technically in an uptrend. It has not come below this watermark to make it a lower low. It's still in an uptrend technically. Whereas HDS is moving sideways. It both had resistance and support. Now support is broken. So that is my reasoning of shorting HDS among the two. However, both might be shortable. Let's look at them using weekly daily. Then we'll get more insight. Let's look at HDS first. Here the weekly shape is bearish. Color is still neutral. Just 1 week ago, it had a very bearish shape candle. That is favoring a short. Let's look at Zencore, XNCR. Okay, if you look at weekly now you can see Zencore has broken a weekly memory resistance also. 1 week ago, it had a very nice false upside breakout at the memory resistance. In fact, if you were watching the stock right on this day, when it displayed the bear release signal, you could short it because it was reversing back inside the weekly memory resistance. And if you look at the weekly, Zencore has some advantage because it is breaking below weekly support also, and the backdrop color in weekly chart has turned magenta. That was not true for HDS. Also, the relative performance slide is tilting down more sharply. So both are on balance. If you look at weekly daily, you could say both are equally shortable. And once I look at weekly daily both, now I am thinking that I am more inclined to short Zencore. Now I have done my homework in terms of technicals. Let's go back to fundamentals and then look up their industries. Then we'll make our final decision. Both are looking shortable to me now. I'm very happy to short Zencore also, but let's check the industry and maybe we look at the fundamentals side by side. Zencore and HDS. I highlighted both of them and I am clicking the scissor icon so that the scorecard eliminates all the other stocks and we look at only them. Now, if we look at fundamentals, HDS is weaker because the valuation is in the middle. Zencore is still undervalued. In terms of earnings growth, both have negative earnings growth. However, Zencore has much more negative earnings growth and hugely decelerating earnings growth. If you look at revenue growth, Zencore has hugely decelerating revenue growth. HDS revenue is coming down, but not so fast as Zencore. So if you look at valuation, you might choose HDS. If you look at earnings growth, you might choose Zencore. If we combine both of them, we may say in terms of fundamentals, both are equally shortable. Thank you, Rick. See you again. Let's look up their industry. Okay, Zencore is in biotech. Biotechs can suddenly go up and down. Let's look at its industry still. Clicking the cog icon to check out the industry score. Biotech is weakening. So industry is supporting shorting. Let's look at HDSS industry, trading companies and distributors. That is also looking weak. So in terms of industry, both are allowing us to short. In terms of fundamentals, both are allowing us to short, almost equally weak when you combine both valuation and earnings growth. In terms of technicals, you could short both. Zencore is a biotech. It may suddenly go up or down. If you exclude that consideration, then I am favoring Zencore a little bit more. But in real life, we may not exclude that consideration. That is, biotechs can suddenly go up and down. So HDS may be a safer shorting candidate. Let's look at the market futures before closing. I'm going to look at them using the E-mini futures, S&P 500. Let's use the daily chart only. In the daily chart, it has memory support. I mentioned in the previous session also, it is not going to be easy for the market to break below all these supports in one go. It may happen, but it's not going to be easy. So far, S&P 500 E-mini is holding on to the support. Let's look at NQ. Also holding on to the support. That is why I was not so bearish, and you can see both Nasdaq and S&P 500 holding on to the support. Let's look at YM. The Dow futures also has a memory support. And lastly, let's look at the Russell futures, RTY. Also has memory support. All the market futures have memory support nearby. Not a time where I'd like to short stocks. Instead, I'll be careful of shorting because there is a tendency of the market or stocks to reverse from the memory lines. Today also there is an event, major event. This is an earnings session, earnings season. Many stocks are announcing earnings every day. Today is a big earnings day. And on top of that, Federal Reserve is going to announce their rate decision today at 2 p.m. Eastern Standard Time. I may not want to take any new trade before the Fed rate decision. Sometimes it doesn't move the market, but sometimes it may move the market a lot. And in which direction, we don't know that beforehand. We are almost at the 1 hour point. Let's end today's session here. Thank you very much for joining. I look forward to seeing you in my next session. Have a great day and trade profitably. Thank you.